All right, good morning, good afternoon, depending on where you're tuning in from. Welcome to this week's mobile coaching stream. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully everyone is doing well. Hopefully you guys can hear me. If you can, type in VV Nation into the chat. Let's get that going here this morning and get us started off. While we're waiting for that, let's see. Good morning, Jay. Good morning, Mark, Drew. Hopefully you guys are doing well. Glad to have you guys here. First people in there. So once again, welcome everybody. This is the mobile coaching stream that we do every single week where we talk about the VectorVest Stock Advisory app, one of the most comprehensive trading apps available to you to allow you to manage your portfolio and make investing decisions quickly and easily, so that way you can enjoy more of your own free time. I'm seeing a lot of VV Nation showing up in the chat, so perfect. That tells me you guys can hear me. Love seeing that. A lot of red out there today. Yeah, joking about that a little bit here. In the chat there with Jay, where, yesterday was May the 4th be with you. We saw the markets, take a little bit of time, but then start to rally after the Fed announcement yesterday of another 0.5% rate or 50 basis point rate hike. Also talked a little bit about their cutting their balance sheet down a little bit, how they're going to do that. So we got a little bit of insight on that. Markets seem to rally right around 2:30 leading into the end of the day. But then now today is Revenge of the 5th, where the Bears are starting to come back in, pushing things lower. So today's definitely going to be a very interesting day. As always, if you guys have any stocks that you want to take a look at, make sure to stick around towards the very end, where we'll analyze those stocks using the Stock Advisory app in less than 10 seconds. So with that, talking about it here, as always, what we like to do is start off taking a look at what's going on in the overall market. Then we'll dive into our topic of discussion. And then, as I stated a second ago, we'll end up with the fan favorite. We'll analyze any stock that you want to take a look at in as little time as possible here. So with that, good morning, everybody. Hopefully you guys are doing well. As always, if you're brand new, welcome. If you've been here for a while, welcome. If you're new, make sure to hit that subscribe button, join the VV Nation, and also smash that like button if you guys are enjoying that. All of that helps us out and continues to grow our community that we built here, and also helps us out with the YouTube algorithm. So if you haven't already, smash that like button. Let's get that going here. Can the Fed land the plane smoothly? Who knows? They haven't never done it in the past, so we'll see if they can do that here this time around. Maybe their 5th, 6th, 7th, 20th time is a charm. Who knows? All right. So with that, let's take a look what's going on in the market here today. Right now, we are 3 ticks into the red, quickly changing from what we saw yesterday, as we just mentioned. So therefore, the market is bearish, and VectorVest does not advocate buying any stocks at this time. As always, we like to scroll down, take a look at the color guard here. It's where that gauge gets its colors from that top row of lights there. And as we can see, the 3 red lights across the board. So that tells us the price, the RT, and the buy to sell ratio are moving lower day over day and week over week. We'll wait to see how that, or if that's true there, Peter. All right. So as we talked about though, we have 3 red lights across the board telling us that the markets are moving lower, not only day over day, but also week over week. We look at the MTI, we can see it's also moving in the same direction. So it's lower week over week and day over day. Then we look at the trend column. So a lot of people were, looking at the primary wave yesterday, turning up by the end of the day. Well, we never got follow through here today. So that's why, instead of trying to predict that early signal and try to jump on beforehand, this is why we always wait for confirmation. We always wait to see if we can finish off that way, and then if we get confirmation the next day, because that'll help us avoid these types of whipsaws like we're seeing right now. Then we look at the second part of the trend column, which is looking at the underlying trend, or the MTI. So since the MTI is below that level of 1, we can see the second part of that trend column is also down here as well. And then last but not least, we take a look at the calls column, which stands for our confirmed calls, and our confirmed calls are our most conservative timing system. They're our last signal we get to get in and our last signal we get to get out. So therefore, we never want to ignore a confirmed call change. As we can see right now, we are still sitting in a confirmed down situation. And then as we scroll down, taking a look at the advanced declines, as always, the advanced declines is a great indicator to look at on a daily basis to see if we have if we have the momentum in our favor, or if we have the odds in our favor, if you will. So when looking at it, what we typically want to see is a 2-to-1 ratio or better. So if the market's moving higher, we want to see twice as many stocks advancing than declining. And if the markets are moving lower, as it is now, we want to see at least twice as many stocks declining than advancing. Well, right now we're sitting at about 11% of stocks moving higher and about 77% of stocks moving lower. So roughly a 1-to-7 ratio, or 7-to-1 ratio decliners to advances. Therefore, if you're going to be playing the market right now, the downside is definitely where we're going to be looking at here today. And last but not least, let's finish off taking a look at what's going on in the market. So the Dow is down to about 2.7% so far. NASDAQ, NASDAQ's getting smoked right now, down over 4%, 4.2%. S&P 500 is down over 3%. The VectorVest composite down 2.6% so far. So really, the NASDAQ seems to be leading the markets lower. So tech is really getting crushed here today. They saw a little bit of a rally coming in yesterday, but that quickly's gone away, diminished, and now we're seeing the bears starting to really take off here. So be careful out there. Just throwing that out there right now. All right, so with that, let's go ahead, take a look. So if you guys saw the title for today, we have our Etf pairs. We have a bullish and bearish watch list. So that way you can play any part of the market up and down. Helps you avoid having to pick individual stocks and helps you stay concentrated on one specific area. So it's a great way to be able to trade the markets without having to spend a lot of time, analyzing a whole basket or analyzing a bunch of different stocks. So as always, we do have some new updates here that we want to cover. Now, there's only a few of them here today, but there's one we'll talk about that I'm looking to add, but we don't quite have the ability to add it yet, and I'll talk about that in a little bit. So what we do is we go to the screeners and go to the featured screens. And right at the very top, we have the Etf pairs, bullish and bearish. So right now, markets are heading lower. We saw advantage to declines favoring the downside right now, or 3 red lights. So let's start off with the bears for today. Now, if you're not familiar with this was created quite a while ago, but it's looking at commonly traded bearish ETFs. So if we jump on board with it or take a look into it, we have all different areas of the market. So we have biotech with LABD, we have gold, NASDAQ, emerging markets, the FANG stocks, Russell, small caps, financials. Once again, you have S&P 500, silver's in here, semiconductors are in here, real estate is in here, Dow is in here, and then so really a whole bunch of different areas of the market that you can take advantage of. So pretty much everybody should be able to find at least one set of pairs in this list that they can take advantage of, that they, choose to follow or they tend to follow there. Let's see, say GoPro. We can Gizmo. So as always, if you want to take a look at a stock, stick around to the very end. We'll get it analyzed there for you. And also, I see a lot of people just starting to jump on board or jump in here. So if you're new and if you're jumping on right now, if you're just coming in to hang out with us, make sure smash that like button to help us out with the YouTube algorithms as well. So once again, we have a lot of different options for you guys out there, but there's a few new ones that we want to take a look at here today. So the very first one is going to start off at the very bottom here with KOLD for natural gas. So as you guys know, natural gas has been one of the key commodities that a lot of people have made some really good money on. Obviously not to the downside, but to the upside. But as always, these have both 1 and 2. So if there's a bearish one here, you can find the counterpart of the equivalent to the upside of the bullish one and the other list, which we'll take a look at in a second. Watch liquidity on pairs. So Albert, all of these, whenever building this list, they have to meet the VectorVest basic criteria. So their price has to be greater than $1, and also they have to have at minimum at least 50,000 shares traded on average. So they do have the liquidity already taken care of for you guys on this one. So KOLD right now, it's up a little bit here today, but as we know, natural gas has been spiking with all the issues we've had going on in Europe. And so the bullish or the bearish ETF has been going down significantly. So when that starts to dissipate, or when natural gas starts to roll over and some of the fears start to subside, this could definitely be a very interesting one to take advantage of for a bounce off of that one. So that's going to be our first one. The second one we're going to be taking a look at here today is for everybody talking about the VIX. So volatility is something that, a lot of people have been trading, a lot of people have been looking at, because the volatility index has been extremely high, really ever since 2022 started. And so this one's going to be the bearish one. So if volatility starts to drop, SVXY will start to go up. We take a look at it. No surprise, volatility has been rising. So therefore, this has been falling. So therefore, the RT is at 0.95, telling us right now it is in a slight decline. So you have that. Next one, we already had the gold miners bear index with dust, but now we have the juniors as well. So if you're not familiar with the difference between the two, you have JDST, which is JDust, or dust, which is the standard gold miner. So the juniors are going to be for more of that speculative trader out there, more of that aggressive trader. So juniors are going to be more of that lower cap, smaller company just getting started, and therefore they have a lot more risk involved. But if they are successful with getting started, they have a lot more upside potential. So you're typically going to see bigger swings out of this one compared to just the regular gold miners that have been there for a while. So these guys are going to be the smaller guys, the small cap, basically gold miners, rather than the big boys, if you will. So right now, JDust with gold, potentially being one of the key commodities that people are looking at, especially as interest rates start to rise, with inflation starting to rise, gold could definitely be an interesting play here. And as gold prices rise, that should definitely boost these gold juniors, also the gold miners as well. So JDST could be a very interesting one, when gold prices, if gold prices start to go up. This is the bearish one. So the bullish one, which we'll look at here in a second, is the one to take advantage of when we start to see the markets rising. But right now, if gold starts to subside, if gold starts to go down, that could give an accelerated rate to the downside with the bearish position here as well. All right. So we've gone through, once again, KOLD for natural gas, new one added here. JDust for the gold miners juniors. We have SRS, which is one that I've been talking about in our jockey club. I've talked about it yesterday during our live stream. We had our afternoon market action with Glenn and I. But it's a real estate ETF, a bearish real estate ETF. There's been a lot of talk about the foreclosure rates and how they're spiking. Granted, they're still lower compared to pre-pandemic levels, but they are starting to rise, and that could definitely be something you need to be aware of, because that could have some serious impacts on the overall economy. With interest rates starting to go up, people are not buying houses as much. Well, that could definitely hurt the real estate market. So therefore, we have SRS. And if you're not familiar with it, as always, once you tap on it, you have the View Stock Analysis Report at the bottom. So we go ahead, click on that, and we can see, tells us right in the business description exactly what it does. So it corresponds to twice the inverse of the daily performance of the Dow Jones U.S. Real Estate Index. So this is a 2 times leverage. Some of these in here can have triple, singles, or double leverage. Some of are so you're going to find a wide variety to help match your own personal investment style in here. So therefore, if you're keeping an eye on what's going on with the real estate markets, with the mortgage or commercial mortgage-backed securities, all of that, this could definitely be one to keep on your radar and keep an eye on here. And then last but not least, from the new ones in the list, we got to scroll all the way up. TBT. This has been a popular one with interest rates on everybody's mind right now. Once again, view the full stock analysis report. And this is ultra short Lehman 20-year Treasury exchange traded fund. And it is twice the inverse of the daily performance of Treasury bonds. So this one has been on a nice steady rise for quite some time. It's up big here today. And so this one, if you're worried about the rise in interest rates and what the Fed's planning on doing, this could definitely be a key one to make you some money in the current environments. Now, as I stated at the very beginning, there is one that unfortunately I'm not able to add quite yet because I don't have a pair for it, and that is Bitcoin. As we know, BITO is a popular Bitcoin ETF, and that is a bull, so it follows the movement of Bitcoin. But ProShares is the creator of it, and they're planning on releasing a inverse ETF of BITO as well. And that hasn't been approved quite yet, but once that is, I will add that. As long as the volume criteria is okay, I will be adding that Bitcoin ETF to this list in the future. Just need to wait for the pairs to come out, because if it doesn't have, a bull and bear equivalent, I'm not going to add it into this list. So with that, let's go ahead. Now we've taken a look at the bearish portfolio, the bearish new additions. Let's take a look at their counterparts. So we'll go to the Etf Pairs for the bullish, and talking about natural gas. As we know, natural gas has been running like crazy. Oil has been a pretty big mover. It can have some pretty big swings higher and lower. Taking a look at it, look at the timing, 1.95. It's moving parabolic right now, and it's been continuing to do that for quite some time. If you're not familiar with it, not familiar with what the leverage is on it, as always, just go to the stock analysis report. You can find it right here. So this one, index reflects the performance of the rolling position, natural gas futures, contracts traded on the New York NYMEX. And this is a 2 times leverage as well. So it's twice the performance there. So if you're looking for leverage and you want to take advantage of these big swings we're noticing in some of these commodities, oil has been one of the top plays for quite some time, and could see it continue as long as there's still, conflicts going on over in Europe, in the Eastern Europe right now as well. So definitely one to keep on our radar if you haven't already. Most people have been keeping it an eye on, just because it's been some of the top rated stocks. You've seen how big some of the moves have been. Most people have been trading it, but I wanted to make sure we get it added in here as well. So that way, as always, our goal here is to be your one-stop shop, and we want to make sure you have everything that you need to be successful in the markets here. So that's our first one. The next one, URE. I put it in here. It hasn't really been trading that actively. This is one that, to go along with the SRS. This one has been drifting lower. It doesn't really have the volume right now, but historically it has. Right now, not so much. Wonder if something's going on with it here today. It's saying percent volume. So yeah, this is one I would be careful with, but if the housing market starts to go back up, which right now doesn't really seem to, I wanted to keep this on our radar so that way you guys have an idea of what to look at, and also to keep the pair here. But the housing market's starting to become a key topic of discussion, seeing the housing market starting to cool off a little bit, especially with what's going on with the Fed. Right now would not be the time to be in this one, but now's the time to be keeping it on the SRS. Let's see. I got a question over on our Facebook side. With the Fed raise the interest rate, how does that affect the yield? So Baxter, going into, when bonds go up, let me make sure I have it correct. So when bonds go up, bond prices go up, yields go down, and when yields go up, bond prices go down. So that should be boosting the yield, if I'm not mistaken. I have to go back and double check that, but I'm pretty sure it boosts the yield. But yeah, there's a lot. I mean, Glenn and I talked about a lot of what the Fed is doing yesterday on our afternoon market action. So I definitely recommend go take a look. You'll get a lot of our thoughts about what's going on with the Fed and what they're doing and our responses to that in that previous stream that we did from yesterday. So make sure to go check that out if you're interested in it. All right. So URE, just had to get it in here right now. Not very active, but in the future, once things start improving for the housing market again, URE could definitely start heating up. So I wanted to keep it here just in case. Then some of the most popular volatility trades right now, UVXY. You can see big swings higher and lower. And right now, the overall timing of it, even with it up 16, almost 17% here today, RT is still below the level of 1, telling us we need to be extremely cautious with it because it's not really in an uptrend for the time being. And, if we go take a look at the graph, right now we're on a 1 week. We can see the huge spike that we had coming into the beginning of the week, that got crushed, I believe it was on Tuesday. And then you started seeing volatility starting to decline as we came into the Fed announcement. And now, after the Fed announcement, volatility is starting to pick right back up. So, could be an interesting one to keep an eye on here. So let's go ahead. So UVXY, a popular one. If you're somebody who likes to trade something that can move quite rapidly on a day-to-day basis, this could definitely be a favorite for you. And then going down, so we have the volatility. We have Jnug, which is the gold miners junior gold miners bullish ETF. And as we can see right now, it is a sell. It is in a steady decline. So therefore, now is not the time. But if you're looking for more volatility, if you're looking for something that can move a lot more or a lot quicker, looking for more aggressive or speculative movements, Jnug is definitely one that we've seen some pretty big runs in the past. Just right now, not necessarily the time, but definitely one to keep on our radar is if gold starts to heat up here over the next few months. And then keep coming down. Let's keep coming down. Let's see what else. Last but not least, was that it? I think that may have been it. Oh, UBT. So UBT isn't exactly a one-to-one match to TBT, but if we look at it here, it's a 200% daily performance of the 20-year U.S. Treasury. So this could be an interesting one. Not necessarily right now, but as we know, things move up and then eventually things come down. Basic laws of physics. What goes up must come down, and what goes down must go up. So eventually there will be a market for UBT, but right now, as we can see with the timing at 0.5, now is not that timing. What is the point of pairs versus contra ETF? So, Monty, this is something that we've built here together in our group that we do here. And these are matching. So if you're somebody who wants to just trade, let's say, the S&P 500, instead of, trying to pick individual stocks, well, you can come to this list. You can quickly find the S&P 500 ETF. SSO is one of them, or if you're wanting more leverage, the SPXL. And then, okay, so I have that for my upside when S&P is saying it's time to be buying or time to be bullish in it. But when it's time to be bearish, I just simply go to the counterpart, the bearish list, and I can find that exact ETF right there. So that way, instead of having to manage a basket of a bunch of different stocks, it makes it a lot easier. A lot of people find it to be more of a time saver and easier to manage when you're just dealing with playing one specific area up or down rather than trying to manage, a basket of 10 or 20 stocks there. So these are all simply put or easy to find, one-stop shop for you guys. So that way, no matter who you are, no matter what you like to trade, you can find its bullish and bearish counterparts. So that way you can take advantage of that one specific area up and down. Keeps you focused on one thing rather than, potentially getting yourself spread out too much and, end up making mistakes there. So that's, that's one of the main reasons of why we have these here. It was something you guys asked for quite a while ago, a few years ago. They've been in here for a while, and it's time to start updating some of these. So, over the next few months, we may be updating more of these. And I'd love to hear you guys' thoughts. What types of new lists you guys would like to see that you guys would find useful here? Why was RT at 1.03 when UVXY was up 19%? Let's go find UVXY. So it was at 0.96. Actually, let's go do this. One day. Let's change the settings. Let's put RT at the bottom here. So as you can see, the price of UVXY has been steadily rising. We've now, with this most recent push, gone from below 1 to above 1. So it's right on that border there, that borderline territory of 1. So it's bouncing around between downtrend to an uptrend. So it's basically flat overall. Typically, when we look at the RT, we want to see it at 1.1 or higher, which indicates that it actually has that momentum to the upside. It's not just, treading water or moving relatively flat. So That's why, it's gone up 3% in a matter of a few minutes, and that has been enough upward momentum to push it above that level of 1 for the time being. So that's on an intraday basis. As we always talk about, all of our indicators are updated live throughout the day, tick by tick. So you will see these indicators adjusting and moving depending on what the data is doing as well. So right now, pulling back a little bit, now at 1.02. So RT is not just looking at whether or not the stock is moving up or moving down, but it's also looking at the magnitude of that move as well. So it's a lot more, there's a lot more to it than just your typical indicator of whether, it shows the stock moving higher or lower. So hopefully that addresses that one there. All right, but yeah, like I was saying though, I'd love to hear your guys' thoughts in the comments of what types of lists you guys would like to see added that you guys would find useful. This is one that you guys requested. We've got it added in here for you. We're now updating it to make it more current to what's going on. Plus, we're keeping the old ones in there, so that way you're not going to miss out if you've been using it for a while. Just going to add more to it, so that way it becomes a more thorough list for everybody to be using, to be able to, get your homework done and be able to free up your personal time so you can do the things you'd rather be doing rather than spending, hours upon hours staring at a screen trying to figure out what your goals are or what your plan is here. All right, so with that, that's going to be doing it for today. Once again, once there is a counterpart to the BITO, then I will add the Bitcoin Bullish and Bearish ETF to these lists. But right now, with only a Bullish ETF available, at least in the US markets, it won't be added until we have both to add in here. Debbie, I'm not sure I'm following you here. When over orange? What's over orange? That RT there? That orange line that we were looking at there is simply the one line, just a point of reference, because the RT, once again, is cast on a scaling of 0 to 2, just like with all of our key indicators here. Anything above 1 is favorable, below 1 is unfavorable. So that orange line is representing 1, so you can see it visually. And right now we're seeing that RT picking up all throughout the day so far and crossing above that level of 1, indicating the short-term trend has gone from down to up on an intraday basis. Now we still want to see it be able to hold that by the end of the day to really say that it's in an uptrend on a short-term basis. But right now we're seeing early signs that it's, if the market's closed right now, early signs that it is starting to hit that uptrend again. All right. So that's going to do it for that. If you guys have stocks you want to see analyzed as well, make sure to start typing those in. Let me know what stocks you guys want to see analyzed. And we can go ahead and start to put those in and see what VectorVest has to say about them. So that's but once again, the screeners here, the Etf Pairs Bullish, comes to everybody who is in the mobile app, who is using the mobile app. So everybody has access to this. You should be able to take advantage of it. And if you have any other questions, if you're watching the recording of this and you have questions about it, just simply give our support a call. They'd be glad to help you out, answer any questions you have there. All right, so let's go ahead and get started. We have Wahid coming in with Facebook FB. FB has great long-term potential. You have solid fundamentals, so consistent balance sheet. However, right now it's getting smoked. The timing is at 0.98, telling us that it is in a slight decline on a short-term basis. Stock has good fundamentals, so it's favorable overall, but right now is not the time to be long in it. Majority of these big tech stocks getting crushed here today, Facebook being one of them though. GLD. And, the great thing about this, these stocks are solid fundamentals, really good stocks. So when this downturn starts to dissipate and we do finally start seeing the market start to rally, this creates a good buying opportunity for everybody to get some really solid, fundamentally sound companies for a lot cheaper, for big discounts than what we've seen over the last few years. So I like seeing that. Looking at gold, GLD, as always, with an ETF, the RV and RS are always going to be pegged at 1. So therefore, whenever looking at an ETF, your primary focus is RT. At 1.03, that tells us it is in a slight uptrend on a short-term basis. Therefore, this ETF is about average. But once again, typically we want to see the RT at 1.1 or higher. Anywhere between 1 to 1.1 tells us it's really just treading water, moving sideways, might be moving slightly up, but not by much there. I know the feeling, Kevin. I know that feeling. All right, let's see. HDSN. So now that we have these, let's go through them together. Make sure everybody's on the same page, especially if you're new here. We want to make sure you have a good understanding of how to read the indicators here at the bottom to help save yourself a lot of time. So the RV, or relative value, is looking at the long-term potential over the next 1 to 3 years. So above 1 is favorable. Therefore, it tells us this stock has good long-term potential. The next one is the RS, or relative safety, which is looking at the consistency and the predictability of their financial performance. In essence, it's an indicator of risk. So if it's above 1, it tells us there's less risk associated with it because they have a strong balance sheet. If it's below 1, it tells us there is more risk associated with it because they have a weaker balance sheet. So at 0.87, that tells us this stock does have a little bit more risk than the average stock out there. Then we look at the timing. Now, timing is looking at the short-term price trend, or the RT. Once again, cast on a scale of 0 to 2. Above 1 and closer to 2 it is, the stronger the uptrend. Below 1 to closer to 0 it is, the stronger the downtrend. So with HDSN right now at 2.0 exactly on the RT, that tells us this stock is in the strongest potential uptrend it could be in. It's moving parabolic essentially. So therefore, it's a high momentum play right now. And then the combination of these three get summarized in our VST, standing for value, safety, and timing. It's a great overall view of the stock from both a fundamental and a technical basis, something you're not going to find anywhere else. So at 1.55, that tells us this stock is favorable from both a fundamental and a technical basis here. So then when we put it all together, we could read it just like a book where we go, okay, this stock has good long-term potential, but does have more risk to get to that long-term potential. It's in a really strong short-term uptrend right now. So overall, the stock is favorable here. All right, CV or CFVI. Let's see. CFVI, poor long-term potential, a lot of risk associated with it. You're moving sharply lower, and so therefore the stock is not favorable right now. GNRC, Generac, one I talked about yesterday. With what's going on in the markets, this one's down less than 1% right now. That's not too bad. I'll take that. This one's holding its own. They had great earnings yesterday, and this one has good long-term potential, has less risk associated with it. Timing, though, at 0.95 tells us it's still in a decline. It's still been getting beaten up in the overall market, just like with everything else. All boats rise with the tide, all boats fall with the tide. Overall, it's a good stock from a fundamental standpoint, but need to see that timing pick up to give us that prime opportunity to jump on board there. Let's see. You're welcome, Victor. SARK. And why I'm pulling this up, just to let everybody know, next week we will not be doing our mobile coaching session here. I will be out of the office for the next week. So today's our last one until 2 weeks from now. So I just wanted to give everybody the heads up, so that way nobody tries to come looking for our live stream and doesn't find it next week. So next week we will not be here. We will not be having a mobile coaching session. So wanted to make sure everybody's aware of that. All right, SARK. So looking at an ETF, RV, RS are always pegged at 1. Therefore, focusing on the timing at 1.52 tells us it's in a really strong short-term uptrend. So therefore, it's favorable right now. GoPro, GPRO. So GoPro, good long-term potential, but does have a lot of risk associated with that long-term potential. It is in a slight uptrend right now. So overall, the stock is favorable. Even with it down here, roughly 5.4%, on a short-term basis, it's still in a short-term uptrend. But one thing I would definitely keep an eye on, we'll put it on a 1 month. The RT steadily moving higher, pulling back right now. Put it on a 3 month. RT's been steadily rising, pulling back right now. But if RT starts to cross below 1 or 1.1 and starting to head closer to 1, then that would be an early warning sign to keep a close eye on it, maybe take some defensive actions to make sure that you're protecting yourself in that position right now. All right, WEAT, wheat. Looking at it as an ETF, timing at 1.57 tells us it's in a really strong short-term uptrend. So overall, ETF is favorable right now. I'm sorry, Jim. I'm sorry. I'll have to make sure we have a big session the week after to make up for that. All right. Sorry, Kevin. Hate doing it, but I got to. Family needs some time to unwind. All right, so looking at Starbucks, good long-term potential, about average risk associated with it. You are in a steady decline right now, so overall the stock is about average at best. FNKO, great long-term potential, but does have a lot of risk associated with that potential. It is in a steady decline right now, so overall the stock's about average. We need to see that timing really pick back up. That would help give that RT a nice pop there. All right, NUTX, poor long-term potential, a lot of risk associated with it. You're in a steady decline, so overall the stock is not favorable here. All right, we got a couple more here we'll get to today. Let's see, SLV, looking at it from a timing perspective since it's an ETF. Timing is below 1, therefore the ETF is not favorable. SLV is in a downtrend right now on a short-term basis. Therefore, that makes the ETF not favorable currently. Extro, EXROF. So Extro, poor long-term potential, a lot of risk. Based off the fact that the RV and RS are both below level of 1, that tells us this is a speculative play right now. Looking at the timing is at 0.99. Therefore, it's in a slight decline currently on a short-term basis. Pretty much flat overall, though, on a short-term basis, but slightly lower, flat to slightly lower right now. So therefore, the stock is not favorable here. They had a good announcement. Let's go back. They had an announcement that they had their first order purchase, agreement, if you will. And even that wasn't enough to really see the stock continue to climb. So, the order was kind of smaller, but it's more of a sign of good faith. And hopefully we'll see more of that to come, which will make that start to take off there. All right, and last but not least, AVID. Good long-term potential, but does have a lot of risk associated with it. Inconsistent balance sheet tells us there's more risk than the average stock out there. Looking at the timing at 0.50 tells us it's pretty much in a free fall right now, moving steadily lower, down 18% here today. So overall, it is not favorable. We take a look, we can see even before this 18% down move here, the RT was already starting to drift lower. The RT was already below 1, telling us the stock was in a downtrend. The 3 and the 8 were negative. If we go to the graph settings, let's go change it here and add on a technical indicator like MACD. So we select MACD, go back, maximize it here. MACD has been on a short-term basis negative since about the beginning of April, and now turning in on a longer-term basis into negative territory, meaning the MACD line and the signal line are both below that level of 1 or below that level of 0 now. So therefore, nothing about that is favorable for the time being. If you're going to be playing it to the downside, there is more potential to the downside currently than to the upside. All right, so that's going to do it here. Let's go back to the homepage, recap what's going on. Right now, no surprise, we are still 3 ticks into the red. Therefore, the market is bearish, and VectorVest does not advocate buying any stocks at this time. If we scroll down, still have the 3 red lights across the board. MTI continuing to move lower. RT continuing to move lower. Buy to sell ratio continuing to move lower. Looking at the advanced declines, the decliners continuing to pick up. Advances were at about 11% earlier. Now they're about 10%. Decliners were about 77%. Now they're sitting at almost 80%. So the decliners continuing to pick up their pace and pushing this market lower right now. If we take a look at the major indices, the Dow is down about 3%. NASDAQ continuing to move lower, almost down a full 5% here today. S&P 500 down 3.5%. VectorVest Composite also continuing to ramp up to the downside, down over 3%. So things don't look great. Follow the color guard. Let the color guard be your guide here. Appreciate that, Badger. And hey, if you can't wait a full 2 weeks, as always, we do have our afternoon market actions on Wednesdays with Glenn and I. I also will be doing the video for Monday that next week, not next week, but the week after for our YouTube. So you can make sure to check that out. And I've got the video or the content for tomorrow to go up on our YouTube channel for the weekend. So make sure to go check that out and, give it a thumbs up and let me know your thoughts on it down in the comments below. All right, so that's going to do it for me. Thank you all for coming out to hang out with us. If you're new here, if you haven't already, smash that like button, subscribe if you're not already subscribed to the channel. All of that helps us out with the YouTube algorithms and continues to grow this awesome VV Nation community that we built here. So once again, thank you all. Have a great rest of your trading day. Have a great weekend, and I will see you guys in 2 weeks from now. Until then, toodles.